Here are 5 ways that actually losing patience impacts your psychology and performance. Number 1, it causes you to establish and reinforce a "who cares" attitude. It actually becomes even worse if you actually lose money when being impatient. You start to kind of get sloppy in those trades and say, who cares? What's the difference? You start losing patience, making bad trades, and then it becomes a cycle, destructive cycle in performance. The second part, the snowball effect. That's where that destructive cycle then starts to feed into the next mistake and the next mistake. As a sports psychology consultant, I'd see it a lot of times with athletes. Baseball players, for example, they make an error in the field, they come back at the plate, they're still thinking about the error in the field, and now they have a poor at-bat. Or maybe the golfer, they make one bad shot. As they approach the second shot, they're still thinking about the first bad shot. And what happens? Snowball effect kicks in, and they have another bad shot, and then another bad shot. Successful trading means being aware of that process and breaking that cycle so that you don't fall prey to the snowball effect. The third way losing patience actually affects you is because you become a prisoner to your portfolio, meaning you end up maxed out in positions and you're forced to do things like sit and wait rather than being able to move around. If you get too big in a position and you time in too early and the market starts to be a little volatile, you're stuck. And then you're caught in the cycle of what I call the H plus W plus P mode. And what that stands for is hoping, wishing, and praying. And I'll tell you right now, if you want to have a great trading rule that'll help you achieve peak performance in the markets, follow this one. H plus W plus P equals E. What that means is anytime you are hoping, wishing, or praying, you need to exit the trade. I don't care if it's part of it, I don't care if it's all of it, but start pushing buttons. The fourth reason why losing patience actually affects your performance is that it undermines your ability to trust yourself as a trader. Now, there's something very remarkable about that element of trust, especially in trading. If you can't trust yourself to limit a loss, then you are not going to trust yourself to take substantial risk. You're not going to trust yourself to get bigger in trades. You're not even going to trust yourself to hold on to the winners and do what's called enduring the pains of your gains. A lot of times traders fall into the mix of they have small profits, and they might have a number of them, but over the span of the year, they're not profitable. How come? Because they're losing more when they lose than they make when they make. Learning to trust yourself, having the patience to know that you can take a loss when you have to take a loss, will help you on the offensive of being able to hold on to trades and getting bigger in those trades when they're working. And the fifth reason why losing patience actually affects you is because it causes you to lose money, but not on your terms. You see, trading is a funny game. It has a success rate of any given trade of about 45 to 55%, meaning any given trade you're going to be right about half the time on. Well, losing patience actually causes you to lose money, and you lose money doing the wrong things, or you lose it the wrong way. In a game where you're going to lose money half the time, my message to you is simple. If you're going to lose money, do it the right way. Do it on your terms. Do it in a method that reinforces your skill of patience so that you can trust yourself to do the right things when things are working, and also do the right things when things are not working.